All right, welcome everybody to another video. In this video, we're going to be talking about how much insurance should we buy, because that is a big question when it comes to buying insurance. It's like the question like, okay, I'll buy it. You got me sold. How much do I need to
Right.
buy? And it's not as easy a question as maybe like it's like, okay, you're 25 years old and you can buy X amount of dollars. There's different considerations in there. So there's a couple schools of thought. So to be able to outline these schools of thought, I've got my friend Ryan Coulter here. He is a financial advisor with Lutner Financial out of Pittsburgh and here in Morgantown. He kind of splits his time. He's a good friend of mine. He's a consummate professional, and we've worked together on cases, and we've just worked together on some stuff. And so I'm really excited to be able to have him here with this video to be able to share some of his expertise.
Pleasure to be
here. All right, so tell us about this. We got these two schools of thought on how much insurance we should buy. What are those two schools of thought?
Right. There's the traditional needs-based approach
Okay.
where you and maybe an advisor try and whittle it down to how much do you need to reach certain goals or aspirations, whether it's paying off debt or you want to get your kids through college, what have you.
Okay, so like if I'm 35 years old, I'm married, I've got 3 kids, I've got $200,000 of debt with my mortgage. We're kind of using those numbers to calculate how much.
Yeah, some number, right? And the issue there, from my perspective, is that you're trying to take an imperfect real world and kind of boil it down to mathematics. And assuming, there's all kinds of assumptions that are built into models to get you to this number that you need.
Yeah.
Okay. The other side of the continuum is just a concept called human economic value. And basically, that is, how many years are you going to work? What does your current income or income trajectory look like over your career? You're going to earn X number of dollars, and that's how much insurance you should have. So kind of two different ways of looking at it.
So like one side is we want to figure out the minimum to
Yeah,
purchase.
yeah, that's a good way to look
And
at
the
it.
other way is like we're looking at the maximum you can purchase.
Right.
So like tell me about that for a minute, because that's like those are within the financial planning world, that's like literally complete opposite ends of the spectrum.
Correct.
And how can we arrive, especially if we got students that are learning financial planning for the first time, like now we're like, we've got some advisors saying purchase as minimum insurance and some saying let's buy the maximum.
Right.
It's a pretty big difference.
It is. I think that if everyone takes a real hard look at it, it just comes down to premium. Like, if you could get all the insurance in the world and it were free, how much would you want?
I mean, you buy it on everything.
Like all of it, right?
Yeah,
give it up, give it all to me,
yeah,
right?
Yeah.
So I think the real answer is that people just don't want to pay for it. I certainly understand that. It's something you don't ever want to use, and you hope you never use it, so you're trying to minimize that impact.
Sure.
But the reverse is catastrophic, right? Like, if you only purchased $500,000 of disability insurance or life insurance, and you actually ended up needing $1 million or $2 million, there's no coming back from that.
Yeah.
So you can't make everything in the financial world about math and theory.
Yeah.
Right?
Yeah.
And there is no perfect answer, but one certainly seems to stick out in my opinion.
Yeah, in my experience, it's like we have a lot of people that have discussed the dangers, if you will. I use that term loosely, the dangers of being overinsured, as if being overinsured is this like cardinal financial planning sin.
Yeah.
And underinsured is, well, it might happen, but you're not going to have to worry about that. It's almost like it's poo-pooed. swept under the
Yeah,
rug?
I mean, insurance is certainly given this negative connotation.
Yeah.
But I can tell you, having done this, I'm in the business now 16 years.
And you're not just in insurance.
Correct.
You do.
Correct. Pure comprehensive financial planning.
Yes.
For sure. I've never had somebody who needed the insurance, whether it was an auto claim, a disability, a spouse pass away prematurely. I've never had someone come back and say, I have too much. I want to give this back to the insurance company.
Yeah.
Like it just doesn't happen that way. To me, it's all based on people don't want to pay for it.
Yeah. Yeah, I have a client that, when she purchased insurance, her and her husband, years and years ago, and then he became permanently disabled. So because of the waiver of premium, the premiums for the term policy were completely waived. The policy also converted to whole life insurance, and so it's building value, and all of those premiums were waived. And, so that plan becomes their retirement plan because they didn't really have a lot else, especially with him not working anymore. They otherwise lost a lot. So, and their disability insurance that he had was actually paid pre-tax, so he got money and then it got reduced even more. And so that became their plan. So it was just that idea again of like, it wasn't their only regret was that they didn't purchase more. It wasn't that they purchased too much.
Yeah, you're not going to give it back and say, "Oh, I had too much."
Yeah.
It just doesn't work that way.
Yeah. So if we're talking, okay, so let's do this. I mean, again, you do full scale financial planning, so you see everything from cash flow, insurance, investments, taxes,
Right.
loans, all of it. Okay, so you see a lot of this. So obviously cash flow is a consideration. So if we've got somebody that's like, okay, all right, I'll bite the bullet. I want to buy my full human economic value in my insurance plans, but financially I'm just not there right now. Like what would your advice be to that person? Is it just suck it up too bad, or what would you say?
No, I mean, if you're working with a good advisor, they're probably going to explain all of the features or riders that are available in a life insurance or disability insurance contract that you can tailor it to your own specific situation, right? So in those worlds, there are riders that you pay for today and add to your policy, which guarantee your ability to go get more insurance in the future, regardless of what happened to your health over that time frame.
Okay.
So as long as your income justifies an increase in insurance, you can obtain that coverage for yourself, your family, business, what have you.
Gotcha. So it's basically still buy as much as you can, make sure that you've got the appropriate riders on there that can help increase that amount. Because the idea is still you just don't want to be underinsured.
Right. And as your cash flow improves and you've done a better job of reducing or eliminating debts or recovering other fees or being more tax efficient, then you can just use some of that new cash flow to go obtain the right level of insurance.
Gotcha. So now what was it you were telling me before the video about, like, we wouldn't insure like half of our house? How did you put that?
Right. I mean, so like if your house burns down, like how much of that do you want back?
Yeah.
Or rebuilt, right?
Obviously all of it, yeah.
If you're in an auto insurance or in an auto accident, do you want like just the trunk back, just the engine, or like do you want the whole car back?
Right.
And do you want like a used one or a new one?
Right.
Right. So we do a really poor job in the insurance world of, not replacing the right amount. Obviously you want your house back.
Yeah.
Not only do you want the house back, but you want the TVs, the furniture, the jewelry, the couches, like everything back, right?
Yeah. Yep.
But and then it gets to disability and life insurance, and it's like, well, let's figure out the minimum amount that you actually need or want.
Yeah.
It just
doesn't
logically
make sense.
doesn't make sense.
Yeah, and I think sometimes, in the industry, just kind of trying to push get somebody as a new client, and it's like, well, if we can get them at such and such a level, it's better than not getting them as a client at all.
Right.
And so we're trying to sell what's easy instead of what's right. And I don't really think that that's helpful or beneficial because it gives a false sense of security that we're okay.
Yeah, and again, I think that's an industry problem as well.
Mm-hmm.
I think the industry, you want to sell somebody, you want to get a client,
Mm-hmm.
but a real advisor is going to show you the right amount that you should have. Whether you can afford it all or not today is another conversation. But if they're just trying to whittle it down to some number to get you as a client, then it's probably not the right advisor.
Yeah, that makes sense. Okay, so just to kind of sum up here, we basically got two schools of thought on this: how much insurance should we purchase? And in this, for the record, also is the same thought process no matter what kind of insurance you're buying, whether it's homeowners, renters, auto, umbrella, life insurance, disability insurance,
Right.
whatever it is. The philosophy here, the two competing philosophies are needs-based, what's the minimum amount that you need to survive, and the other one is what's the maximum amount that you are able to get. So those are kind of the competing philosophies. And for good financial planning sense, if we take premium dollars off the table, the wise decision is to get as much insurance as you can,
Right.
not as minimum, because the purpose of financial planning is to make sure you have money when you need it. And insurance,
You never know when you're going to need it.
right. And with insurance, you never know what's going to happen that's going to lead up that's going to change how much you thought you needed.
Right.
Whether it's a disability, maybe it's a disability where you're just not able to work, but maybe that disability came with a ton of medical bills, and you just never know.
I mean, the investment world changes every second.
Yeah.
So how can we use some assumed rate of return, some assumed inflation rate, some assumed tax rate when the financial world changes literally every second?
Yeah.
And just assume that that's going to be perfect for the rest of your life.
Yeah. Especially when you made the decision 8 years ago.
Correct.
And it's supposed to be a decision.
And you're making half of what you make today.
Right. Right. Or double, or whatever it might be. There's so many different things. But yeah. Okay, cool. All right. Well, do you have anything else any other words of wisdom on this topic?
No, I just, I encourage people to really spend a lot of time trying to figure out what's right for them. And if you don't have an advisor that's pushing you to think and really talking more about your goals and what's important to you and your family, not just today, but what would you like your future to look like?
Yeah.
Then you're probably just working with a salesman, not a real advisor.
Yeah.
So really take the time to maybe get a referral to somebody that's already been trusted and they've been working with somebody for a really long time.
Yeah, I always like to use the example of you don't hop into a boat and tell the captain, take me somewhere that makes me happy. You have to know, and it's the captain's job to help trim the sails to get you where you want to go. And it's the same way, you can't just have your financial advisor just make me rich. You got to be able to work with them and have a direction, this is where I want to go in my life. These are the things that I want to accomplish. And then it's their job to help you facilitate your finances to be able to get there. So yeah, I can appreciate that. All right, well, hey, thank you so much for being here. Appreciate the time, appreciate the input today, and appreciate the expertise on this problem, because I know it is something that it's a hard problem for people to kind of reconcile. So anyway, we appreciate you being here today.
No problem. Thanks a lot.
All righty, thank you, everybody. We'll be back next time for the next video. So have a good day.